Hey, this is June from Turning Point Life Investment, and this video is for the week ending in February 14, 2009. So, nothing really much has changed from last week, so I'm going to keep this video a little bit shorter. What I'm going to do is actually combine the market analysis with the gold analysis into one video rather than having two separate videos. So, starting with the 3-year weekly view of the SPY, we noticed that we had a down week this week. Okay, I mentioned last week that based on the VIX, how it's showing bearish divergence, that most likely we will have a down week, and we got that this week. Let's go into a smaller time frame, a 6-month daily, to see exactly what happened. So other than a huge drop on Tuesday, the market really went nowhere. Okay, so there's really not a whole lot to say. When the market's presenting you with nothing, there's you shouldn't extract any more than what's in front of you. Okay. So as we know, our immediate support right now is at 60, and our immediate resistance is with this 50-day moving average, as well as somewhere around the 88 area, right around here. Okay. As far as the indicators, I mentioned last time that in a sideways market, these indicators really tell you nothing. So a lot of times I would just kind of take it out and just look at price by itself and see what it's doing. Okay, you can see how it's trading within this channel right here. Okay, and it's also trading within a bigger channel. I mentioned from last several videos already, this huge channel of 95 as upper and lower boundary as 75. So the main thing to take away as far as this week is to really watch for these two levels. Most likely, if we do get a break of this 80 support, we will probably head back to 75. And if we do decide to get an upside break of this 88, look for this 95 as resistance. So other than that, there's really not a whole lot of information to say, or anything else analysis to say about this week and going into next week. And next week's also a short week, so there's only 4 trading days before option expiration. Usually the Friday of expiration is relatively flat, okay, normally, right? So if anything, we might get some kind of movement on Tuesday, Wednesday, and Thursday, but Friday should be relatively flat. Okay, we're going to go into the VIX. So I drew this triangle right here for the VIX, but I'm going to take it out because, well, it's no longer within a triangle. Okay, so rather than having a huge breakout to the upside, it just basically creeped along outside of the triangle. So the triangle pattern is no longer valid because it's no longer fitting within that triangle. We're going to look at support right now at 40, okay, and we're going to look at resistance right now as 50. So same thing with the market. As far as sentiment goes, buyers and sellers aren't really showing a whole lot either. Okay, so any break of these support levels might indicate a little more movement and direction in the market. So what we're going to do is take a look at the open interest, since there's one more week left. Looking at the open interest during the last week will give us a general idea of where the market will likely expire. So looking on the calls open interest here on this column of this front month, we can see that I would say 85 strike for calls for the upper side is a possible target, and the next level is 88. So 85 and 88 are the possible expiration levels to the upside. And as far as downside, we can see how this is the puts column. You can see how 82 and 80 stand out really huge with these numbers right here. So possibly 82 and 80 are the expiration levels for the downside. Okay, so that concludes the market analysis. Let's go into gold. So I'm going to use GLD for analysis, as well as a few other stocks later on. But looking at a 3-year weekly, we mentioned how the prices have been on a steady rise right now. It's making a series of higher highs and higher lows. Okay, let me put in some lines right here. Okay, so it's using this nice rising support line. We managed to break out of the previous high right here, and as well as this high right here. Okay, so we're heading towards this next high, which is around 96, 97, and ultimately the all-time high around the 100 area. But I want you to look at the stochastic. Stochastic is starting to get into overbought, so it's telling you that this huge run-up right here is starting to be a little bit overstretched. Okay, so going long right now, it's a little more dangerous because, well, the market's pretty, or at least for gold, it's a little bit more stretched out than it was down here. Okay, so the chances of it coming back down is pretty high. So looking on a 6-month daily, so we can see how after this huge breakout right here, prices have managed to find support. So 87 is going to be the new support level right here, as well as this 20-day moving average. And we did manage to break above this previous high. So I said 97 would be our next target. What I'm guessing most likely is going to happen, we will probably shoot up towards 97, get overbought even on daily and a weekly, and then market will probably, or at least gold will probably come back down towards some kind of support. I would say maybe around the 90 area, because that's where the previous high was. So that's my at least analysis for gold. Okay, another one we can look at is GDX. So it's telling us the same thing on a weekly view. This is a weekly view. Stochastic is getting overbought. Once again, it's telling us that the gold market is getting a little bit stretched out to the upside. So we might get a minor or a pretty good decent pullback or correction sometime soon. Okay.